By the way, markets continue to slip and now below 26,100. So it gives us the perfect segue to invite Rohit Srivastava, founder of Indiacharts and Strike Money, on the show. Rohit, thank you very much for joining in. This is Reema here. Wish you would have joined us in the studio today. But how are the charts looking, and what is your near-term, medium-term view on the markets now?
Yeah, I wish the entire CNBC team on this special day. 26 years is a lot, and congratulations to all of you for having made it through this, and I'm sure there'll be many years to come. So wonderful job by all of you. And coming to the market, my sense is that we are still consolidating inside this congestion. 26,300 on the upside, 25,800 on the downside. I don't think there's a lot of downside beyond that. I do think that the markets will consolidate and eventually break out on the upside. It may be taking time, but the eventual direction is going to be higher, is what I think as far as the Nifty is concerned. On the Bank Nifty, around 59,000, I think, is the critical support. It's managed to hold on to that 20-day average for quite a long time. And I think it should probably continue to do so. So, in fact, Bank Nifty is probably the outperformer of the lot. Banking stocks have done better than most other sectors, and should continue to outperform going ahead as well.
Okay. All right. Hi, Rohit. Good morning. Good to see you in. Give us a couple of levels. You believe the Nifty is headed higher? Oh, where is it headed, and who leads us up? As you said, the Nifty Bank is looking good. Almost went to that 60,000 odd mark, slipping a little bit as we speak. But levels on both these two?
So I think we go towards 26,800, eventually maybe cross 27,000 next year, but 26,800 is going to be the next level we'll be watching for once we complete this consolidation and break out above 26,370. On the Bank Nifty, initially probably 61,800 and eventually maybe around 64,000 is where it should go to. So both of them should continue to make new highs into the year end, or apart from the near-term setbacks that we are seeing, mostly because of, I think, the small cap index, which is still weakening today.
Any stocks, Rohit? Any trading ideas for the medium term?
So I think I think the interest rate sensitive sectors, they come out on top. They are also been the best performers over the last month, which includes auto, banking. But I would also include metals, which is not up there yet. But I think commodities as a segment will do well given the rate cycle, given the potential direction of the dollar. And therefore, that would be, the third sector to really focus on. So banking, autos, metals, I think are the easy ones to latch onto.
Any word on gold, since you're talking about metals, or any other metal, base metal, precious metal, if you like anything from there? And also quick word on the Indian rupee if you've tracked the charts.
So on the base metals, I think they're going to do better than the precious metals, at least for the initial period of this year. And if it comes to equities, I think 2026 will be a year where equities outperforms gold. I know 2025, we've seen gold outperform equity. But if I look at the monthly chart of gold, the RSI is almost 91, 92, and that's extremely overbought. So I think it's a little risky to be in gold right now from a 6-month perspective. But I don't think that's the end of the gold bull market long term. Over 3 to 5 years, it might still eventually make new highs. But right now, I think it's a good time to shift that asset allocation away from gold towards equities. That will probably do better. However, the base metals, as you mentioned, are actually picking up, because when we go and look at prices of copper, aluminium, zinc, all of them have actually moved up over the last 2-3 weeks, gaining meaningfully. And I think the direct impact comes on commodity stocks. We are not seeing that so much in the domestic market. But if you look at the Dow Jones Industrial and Metals Index, it's actually made a new high, and it started to trend higher. So I think we will see that in Indian metal stocks as well. Actually, Indian metal stocks did pretty well last year, making new highs. So I think that is probably the reason they are not exactly tracking that move, but they will continue to do well. So I think base metals over precious metals is what I'm saying, and equities over gold is also what I'm saying. But when it comes to the currency, which also helps the commodity trade, because in India, when the currency weakens, commodity prices also inch up. I think the worst for the rupee is probably over here at 91, 92 range. I don't think we will go significantly above 91 level. And we should probably see strength in the rupee going forward.
Right. Rohit, thank you very much for joining in.